Yeah. So this environment, I'd say a few things. Like, so capital has become very expensive. And so the uni market, what may have been, an L550 to L550, L600 standard unit tranche, any company can get 6 times leverage, is very quickly shifted. And so pricing is a lot higher, I'd say, just to even start, and leverage has come down a good amount. And that's just across the board. So it's additive from the perspective of, we as lenders have more power. I think we're seeing a lot more rescue financing type asks, or more distressed debt type asks, where it's like, can you give us something with PIK? Is there some way we can solve for this? I think the areas where you're going to see the easy money, which is just the case, is a lot of like recession resilient businesses that may currently be closed because of a COVID type situation. So if it's an area where it's like a lower price retailer that generally does well in a recession because consumers trade down, but all their stores are closed, they're going to still need to pay debt. They're still going to need to do things, but there are scenarios there where you can look and say, hey, there's recession resilient business. In the back half of this COVID thing, you might want to pay attention to that. I think you're also seeing a couple of healthcare business pivot very quickly to telehealth. And I think we've seen some interesting opportunities there where, like, look, the next 3 to 6 months, they're going to be brutal because you're in this position of making this transition. But in the long run, I think telehealth will do really well. Um, to your second question of, like, what's kind of the long-term play here, I've started to just like take a step back from, to be honest, like a lot of this like investing or finance kind of views, and trying to just better understand what's going on. Like, I do think you'll see a lot more just general like government intervention. I do think you'll see a lot, I wouldn't call it Occupy Wall Street, but I do think you've got some like weird incentive structures where a CEO can take out a very large bonus in 2019, and say, hey, it's because I did a good job. And in 2020, he yells Black Swan, I couldn't foresee any of this, gets a bailout. I'm not saying it's the same as like an '08 bailout, but you can see how the public can see some similarities there. And I think you're going to just see a lot more like governmental action on this kind of thing, where some of the incentive alignment structures may not be as optimal as they could be. And I think that's really going to impact a lot of how you're going to like be investing in things. I don't know what the outcome is there, but I think that's something you're going to have to watch a lot more of.